Are you ready to unlock the secrets of smart investing and keep your hard-earned money in your pocket? In today's video, I'm going to unlock Norbert's Gambit, a powerful strategy that can save you big on fees and boost your portfolio. This method is perfect for beginners, and I'll give you a step-by-step guide to help you get started on your investing journey while you're building wealth in US securities. Be sure to stick around to the end because you will not want to miss out on this valuable strategy. Before we do that, of course, we're going to examine my portfolio. We're going to see how it's performing. We're going to buy some stocks, and we're going to look at the dividends that we earned since the last video that I posted. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners because let's face it, there's nothing that gets you ready for that first day of your investing journey, and I do it by sharing all the ups and downs along the way. Okay, this week's movie recommendation is definitely a blast from the past. In fact, it's a movie I had never seen before. But now that my wife and I are a little bit older and we have kids, of course, we get to watch the movies that they want to watch. It's a family-friendly movie that follows a group of mischievous kids known as the He-Man Women Haters Club. The main characters are Spanky, Alfalfa, and of course, Darla. That's right, it's the Little Rascals. Sounds cute, right? But what's the plot? Well, the story centers around Alfalfa falling in love with Darla, which causes all kinds of trouble because the club's main rule is no girls allowed. The gang tries to break them up, but in the end they end up winning a go-kart race. It's full of hilarious moments and heartwarming scenes. It's absolutely perfect for kids, and it has a lot of clever humor that adults will enjoy as well. The characters are really charming, and the antics they get up to are very entertaining. So, if you're having a family movie night coming up, give this movie some serious consideration as a top choice to watch. All right, the account is up to $145,564. My account is comprised of 4 separate accounts: my cash account, my TFSA, which is the main focus of this account, and my RRSP and our kids' RESP. All right, so let's jump over into the cash account. This account's holding $26,755. You can see that it's earning me $59 in interest this month. Now, why is this important? Why am I showing this account? Because yes, technically it is my main banking account. We're switching from the big bank over to Wealthsimple. Why are we doing that? Because we get interest. In the big bank, we don't get any of that. Now, it's really important, the other reason I'm showing you this, is that you have an emergency fund. If you don't have an emergency fund, no point in starting to invest. Okay, we're going to jump into the kids' RRSP. This account's up to $67,987. If we look down here, we can see what the asset allocation is. We're investing US equities, international, emerging markets, Canadian equities, global equities, government bonds, gold, and cash. Down here, you can see the percentages. Total invested, $56,955. That's $200 every 2 weeks, which is complemented by government grants, and you want to take advantage of those for your kids. Total returns, $11,030. That is huge. That's just 14 months of investing. Simple returns, 19%. Now, that's a lot of money, and I'm super proud of that. Okay, so dating back in the activity tracker, we invested $200 more. That went to GLOV, EEMV, ZFL, and ZEA. If you want to know what those are, jump back over to that picture where I showed the asset allocation, and you can look them up and determine what parts that's being invested into. Into the RRSP, it's down $83.88. When you're seeing this, the markets are actually on the move, up $376 over the week, $754 over the last month, and over the last 3 months, we're up $1,528. Lastly, all-time returns, $2,641. That is a 17% increase in this particular fund. And in this particular fund, I'm actually not investing anything. So if we scroll down, we're going to see there's only 6 cents in USD, which is 8 cents Canadian. Why is that? Because the main focus of the channel is the TFSA. You're watching me build that again from zero to maxing it out. And when we're done with that, then we'll look at putting money into this particular RRSP. But also keep in mind, I have my spousal RRSP, which I get the tax credit for and my wife actually holds. So we're likely to put more money in that one. And if you want to learn more about that, you have to check out my monthly updates. I'm on to the third one at the end of this month. There's 2 that I've put out. You'll see them up here on the screen for the first one, and you can go in the playlist and you can check out those ones. So what are we doing? We're actually putting the money in drip back in. All right, activity tracker. We got a fractional buy of Plaza REIT at $297. QQQY paid out $32.59. VOO paid out $13.18. VRE paid out 47 cents. HYLD paid out 11.42 in Canadian funds because I have one in Canadian. HYLD.U 254, Tesla 1637, and of course all of those are then in drip being reinvested back in. Why does that work? Because well, simple, you don't have to pay any fees to sell these. Questrade, I do. All right, lastly, we had EAT pay itself out, $8.66, and you can see again that we had some dividend reinvestments with Plaza REIT, CAR UN, and obviously with EAT.UN. So we're just recycling those dividends back into these securities to watch this account grow over time. Okay, folks, so this month I made one big change to my RRSP. Remember, we're not adding any money to this account at present. That will come sometime in the future. So if we go back when I started investing again, I took this shotgun approach because I didn't know what I was doing. That's the motto of this channel. There's nothing that gets you ready for that first day of your investing journey. Well, I certainly wasn't ready for it. And my research told me that I wanted to be diversified. And so I looked at single positions in various REITs. And I do like REITs. I think real estate is a decent investment. And when I looked, CAR UN, which is the Canadian Apartment Properties Real Estate Investment Trust, seemed like a decent investment. Now keep in mind, I didn't do any research, so that's certainly bearing it all. But this stock has been really flat. Now it does pay a monthly dividend. If you're really young, maybe this isn't the right place to start, but like me, I'm a little bit older, so if you want some monthly income, perhaps this is the right thing. But here's the thing, monthly income can't be payable if you're not retired from an RRSP unless you want to draw down on it. So it probably would be better to hold this in a TFSA or maybe a non-registered account if you'd maxed out your other accounts. So for me, I was holding only about $500, which I think equates to maybe 6 or 7 shares if I remember correctly. So in my view, it doesn't make sense to hold this. The second reason is that obviously the stock's not performing incredibly well. Now interest rates are coming down, so that could change, obviously. But also the fact that I hold VRE, which is a basket of various real estate trusts, which includes this particular real estate trust. So I went ahead, I made that sale, and I sold and then converted those funds from Canadian. Yes, I got hit with the 1.5% conversion fee, but I moved that over into US funds, and then I made a fractional purchase of VOO in the S&P 500. So to recap, it's the only change I made in my RRSP. I'm trying to streamline that account, and I think it makes more sense to be holding more American stuff in the RRSP. And I'm holding VOO, which directly holds the underlying holdings, where VFV in my TFSA does not. So there is a withholding tax. So in the end, I think I'm saving more. And the growth in VOO is much greater than the growth in CAR UN. And because I'm holding VRE, I will see some growth from that ETF. Now, that doesn't mean that I won't introduce CAR UN back into some account later on. But for now, I've sold it off. All right, let's jump over and look at the entire portfolio. I don't often show this when I'm doing my videos, so I thought it would be good to give you a quick overview. You can scan through this as you want. You can pause, look at the different ones. And of course, you guys can always check me out on Blossom Social. If you don't know what it is, it's a social media app for investors. Lots of people on there, other people on YouTube like myself. Lots of good information to be shared over there. So if you're not already following me on Blossom Social, jump over. I'll have it up on the screen here what that looks like. You can download the app and get started. Into the TFSA, we're down $241 on the day. Again, this week they're actually going up, so it'll be different on the next video. We're up $433 over the week. Over the last month, we're up $1,175. Over the last 3 months, we're up $2,339, and over the last year, we're up $4,029. All-time returns on this account, $4,171. That's a whopping 14% increase. I'm absolutely blown away by this. This is fantastic. Again, I've only had this for 14 months, but man, it's sure good. Only $2.78 sitting in Canadian funds in here, but I'm going to deposit another $1,000. That's the bi-weekly investment that we do here. Stock lending is on. We've earned $1.19. That's up from the 1 cent that I started with when I first started turning this on. And of course, you can always go into the earnings history to see how much money you've earned, where you've earned it, and what stocks are actually on loan. So you can see here that on July 15th, we earned 39 cents. And an additional 21 cents. So this is actually growing over time. Okay, overview of the TFSA. Same thing as my RRSP. I wanted to give you guys an opportunity to see what holdings are actually in here, not just the ones that the asset allocation I'm buying each week, because sometimes I'm not buying all of them. And you can see here that there's only a few stocks within my portfolio that are not performing well. You can see TELUS here is one of them. Generally speaking, of late, the Canadian stocks are the ones that are not performing great, but hey, that's to be expected. So if you want to watch or check these out individually, again, over to Blossom Social, you can check me out there where you see my trades live in my portfolio, or you can pause the video, jump back and forth and see that. All right, VFV paid out $32, VRE paid out $3.85, HYLD paid out $8.53, QQC $1.81, and REI, we got a manufactured dividend, $2.68. That manufactured dividend is as a result of stock lending. So I lend the stocks out. Wealthsimple then pays me in this manufactured dividend so that I get my whole dividend for that particular holding. Dividend reinvestment here for all those dividends that came back in. That drip is turned on in Wealthsimple, so we're just reinvesting back into each one of those securities. Lastly, Plaza Riet paid out $1.27, and we see that manufactured dividend again because it was loaned out in this case. Okay, so the last thing we're going to do is we're going to jump over to Passive. Passive is the tool that I use to track all the dividends, all the activities. It's a great place to bring all your accounts together in one place. Here we are in Passive. Our accuracy for our asset allocation is 90%. Each week I invest $1,000. You can see it here. We have $1,002.78 to invest. Total value $3,739. And what Passive will do is take that money that we've invested or brought into the account, and then it makes suggestions based on the current value, which is updated real time because the brokerage account is linked. So the first thing we're going to buy here is we are going to buy 3 shares of QQC. That's the NASDAQ 100. We're going to buy 1 share of REI. We are going to buy 4 shares of VFV. That's the S&P 500. The S&P 500. We're going to buy 4 shares of XEC. We're going to buy 3 shares of XEF. And finally, we're going to buy 1 share of XEI. That's the high dividend yield ETF, which pays a monthly dividend. And then finally, 2 shares of XIC. I'm going to save the trouble and go ahead using this. I buy them and poof, we'll all be finished. And of course, the last thing that we're going to do is we're going to talk about Norbert Gambit. Norbert Gambit is a method used by investors to convert currency within a brokerage account at a lower cost than traditional foreign exchange methods. It involves buying and selling shares of a duly listed stock simultaneously on the Canadian stock market and the US stock market. The result is that investors end up with US dollars in your brokerage account, which they can use to buy US investments without incurring foreign exchange fees. Okay, so now a little history lesson about Norbert Gambit because it has a Canadian connection. This method is named after Norbert Schlenker. And I'm sorry, Norbert, if I pronounced your name wrong. I apologize. He's a Canadian journalist who is credited with inventing the technique in 1990. He was a frequent traveler to the US and he found that traditional foreign exchange methods were too expensive. He developed Norbert's Gambit to convert currency in a cost-effective manner to alleviate this issue. Now, it's important to note that not every brokerage allows this technique, so you'll have to check with your broker to determine if it's allowed. For instance, I use Wealthsimple and they don't allow it, so I end up having to pay that 1.5% exchange fee. But if you watch this video here on the screen, I found out a way that you can get around that and save and put money back in your pocket if you're a Wealthsimple customer. So let's jump into this step-by-step guide on how to convert your money from Canadian to US funds using the Norbit Gambit method. Okay, now for our step-by-step guide of how to complete the Norbit Gambit method. Today we're using Questrade, as I said, because they allow this, and Wealthsimple, the other brokerage I use, does not. So here we are on the main page, and this is the mobile version. There is a desktop version. They are very similar. The first thing that we need to do is we need to get to the search icon, which is up here in the right corner. You can see by the red circle. In the search bar, we're going to type in dlr.to. I already have it. You can see it here in my search. We're going to select it. The next thing we're going to do is we need to make a market order. This is important. Change it from limit to market order. Now today, because of the amount of money that we have, we are going to buy 254 shares. So you're buying DLR.to in Canadian funds. We'll process that transaction. Now we have 254 shares. The next thing we need to do is go over to the support side of things and talk to Questrade. We hit the support icon. We're going to go chat with us. It's going to bring up this screen where we're going to be asked a number of questions. This is to determine that you are the rightful owner of the account and that you're not something like AI. This little screen will come up. You want to choose the menu that allows for you to do a trade. Then you're going to wait in line and somebody will come online and they're going to introduce themselves. And here's what you're going to say. Hi there, I would like to journal my 254 shares of DLR.to, and you want to journal them over to DLR.u.to, which is the US version of the exact same thing. We hit send. The person on the other end will then respond to you, to your request, and they'll say yes, they're willing to do it. This can take about 3 to 5 minutes. Of course, with the added benefit of editing, we'll skip through that. In the meantime, they're going to ask you some questions. Your full name, your date of birth, your username, and that's to verify that this is your account. Of course, I've skipped over this so that I don't share this on the channel. Now we're going to wait, and they're going to come back and tell you that this is complete. And once they do that, we're ready to move on to the next stage. Okay, so they've told us that we're all set, it's completed. Now it does take about 3 business days for this to settle. So we're gonna fast forward, it's now 3 days later, we're back in our account, we scroll down, there's our DLR now, it's U.to, not DLR.to. It's now, you can see, in US funds. We're going to go in, we're going to sell the 254 shares. Again, it comes up as a limit order. Make sure you change it over to market order. Then we're going to hit next. And in this case, if you look, we're going to get charged $5.83. That's something you can't avoid. But the difference that in this, using this method, what you're going to save is definitely worth it. Here we are now, we're going to show how much cash. So we have $2,590 in US funds available for us to trade. So we took Canadian dollars, we converted it by buying a Canadian stock, which is DLR.to, over to DLR.u, which is the US version. We sold it with about a $5 fee, and we immediately sold it. And now we have $2,590. Now, if you want to find out what I did with that $2,590 US, you have to wait till my monthly update comes out for all the other accounts, because remember, this channel is about highlighting my TFSA, but I am doing these monthly updates in order to show you what's going on in these other accounts. All right, folks, this was a pretty short video in comparison to some of the other ones, but I think that the Norbit Gambit method is a great method to use. I've used it a significant amount of time. I would say right now about more than half of my portfolio is in US funds, but we'll talk about that in the monthly update. Just a little update, I am going on holidays this Thursday. I am going to strive to get my monthly update out at the end of the month. But given YouTube is a side gig for me outside of my full-time job, my family comes first, as I'm sure many of you can appreciate. But if I can swing it while we're on vacation, I will try to get that monthly update out. I am back in a couple of weeks, so there might be a delay both on my next monthly update as well as my next 2-week video. We'll see. Again, family has to come first. Again, if you've made it this far in the video, thank you very much. It's a lot of fun. I'm really enjoying making these videos. The viewership is growing. I did a post there. I said that we've grown significantly since the last video. We brought on about 100 subscribers and our view time is actually increasing. So obviously what I'm doing here is helping a number of people. I really appreciate it if you give me that thumbs up, smash the like, and of course share it with other beginners, because that's how we get the word out to other beginners out there. And if you're not subscribed to the channel and you're finding this incredibly useful, hit the smash the subscribe button, because again, I really appreciate that. It helps grow the channel, and I'll continue to endeavor at this. Like anything, if you're not following me on Blossom Social, as I mentioned earlier in the video, jump over there and check that out. But of course, folks, if you're just getting started out with your investing journey, it's really important. You probably want to watch this video right here.